The Kentucky Small Business Development Center is a statewide, nationally accredited program that provides no-cost, confidential business coaching and training services. Whether you're just getting started or are ready to expand, we have the tools, resources, and expertise to help you succeed. We're part of a national network, America's SBDC, with over 1,000 centers across the nation. To learn more about how the Kentucky SBDC can serve you, please visit KentuckySBDC.com or email us at info@KentuckySBDC.com. You can also reach us by calling 888-414-7232. Thank you for joining today's webinar. The chat feature is available for you to ask questions and interact with today's speaker. Please take a moment to introduce yourself and where you are watching from today.
Welcome, everybody, to another chapter of Webinar Wednesday, and glad to see you guys are here. So if you wouldn't mind, just let us know that you can hear us and you can see us well. So look at the right of your screen. You'll find the chat feature, and as we go forward, you can post any questions we have you, and comments. So go ahead and give us your name and tell us where you're joining from, so we can kind of see. There's Larry, Logan County.
County.
Yeah. Good to see you, Larry. Thanks for joining us today. Hey, Melanie. How are you? Good to see you. Melanie's a good friend of mine. Glad you could join today. Something I've been really interested in here these last couple of months is how to increase the value of your business and make it easier to run. And I've been able to convince Dave Pierce to come back and see us again. He is a great strategic planning coach with Petra Coach. He also is a certified value builder coach. And this whole methodology can take any business and set it up for success and really create value in your business. And going through these steps actually makes it easier to run and professionalize your business. And it works any size business. You can start doing this from the smallest company, just kind of getting set up. That's a fair statement, Dave.
Yes.
Okay. So I know everyone, when they start their businesses, they are investing their time and their money in it, and they want to grow something of value. And this is a great step-by-step toolkit that we can use. So David Pierce is, like I said, is a strategic planning coach with Petra Coach and a value builder coach as well. He's got a lot of experience. He's been a great resource for me, and I hope you take advantage of him as well. So, Dave, I'm just going to hand it over to you, and let's get started and take a look.
Very good. Thank you, David. Appreciate the introduction. Hopefully everybody's gone to the grocery, the ones in our area, and got your bread, milk. And I told David I'm going to be living off pizza for the next 3 days. My wife's out of town, so I'm going to eat pizza all week. So hopefully you're ready for this. I'm glad we had this today, because tomorrow may not be so good. So
exactly.
It's good to be here. Thank you. Yeah, the title of this is kind of intriguing. Increase the value of your business by up to 70% is a true statement. It's based on a study of I think it's about 50,000 companies now that have kind of gone through the value builder process, and they are able to make this statement based on the results that they've seen, the organization has seen in the companies they work with. So pretty exciting. I can't think of any company that wouldn't want to increase their value. And this is one methodology. It may not be 70%, but there is some increase in value that I've seen in working through this methodology with companies and in working with the value builder folks directly. As David said, I'm a coach. I've been coaching over 5 years, right at 5 years now, formally, and I've done a lot of coaching before that, kind of on my own, but formally, I've been with Petra Coach in my 5th year now. Trained on scaling up, which is a great methodology. It's a bigger scale methodology, several years of implementation, great results. And, I've talked about that in a webinar previously, and you probably heard of it. But I've also got trained on Value Builder because I really think there's a good fit for any size business can use Value Builder, but especially the small smaller business or the entrepreneurial business. When I say small, it can be, anywhere up to $5 million in revenue. So that's depending on what you call small, but it a really good fit, a good niche for this because it's very tactical, very practical. It's kind of it's short implementation, about a year or so. So that's why I got excited about it. And then looking at the results that they've had in talking to the organization, I was very impressed with the Value Builder system. So what's today? I know you've heard about Value Builder. Some of you have seen some things on it, and I've talked about it. So I really just want to go and kind of give you an idea of what the system is and talk about the 8 drivers, because you should be thinking about these 8 drivers. You can never hear these too much. So even if you heard recently about the Value Builder system, repetition is the key. So the more you hear about these things, the more you're going to begin to think about these things. So I want to review the 8 drivers of value in businesses. And then I'm going to deep dive into one of the drivers and give you some tools that will help you improve on that driver. So most of the day is going to be, our hour is going to be spent on giving you some reasons and some implementation tools that will improve one of the drivers, which if you do, will in turn improve the value of your company. I'm also going to give you the opportunity to have a free ebook once we're done that covers this tactical measure that I'm going to go over. And then I want to kind of close just to introduce you and tease you a little bit. David and I with the SBDC have been working on a possible offering of the Value Builder system to the members at a greatly scholarship discounted price than we would typically charge on a group basis to put together some mastermind groups, excuse me, that can go through the implementation. So I'll share a little bit about that at the end as well and show you how to get all the information about it. So let's dive in. First of all, Value Builder is a very objective measure of where you stand based on these 8 drivers in your business. So you start off, you take a survey, an assessment, takes 13, 15 minutes, and you get a score. So your score anywhere from, I guess, 0 to 100. And depending on where you fall on that, it will represent how much more opportunity you have. So the typical Value Builder score is in the mid-50s when a company takes it, essentially. And then from that, they tend to go over 80 if they're committed to the implementation. What we found is if you get your score up to 80, you typically have a higher value, up to 70%, than the average Value Builder company. So you go from 50s to the 80s, you can typically raise the value of your company significantly. And one further fact about that, they say, well, even if you're an overachiever and you get to 90, 90 plus, they've seen values at twice the average Value Builder score company that starts into Value Builder. So that should be exciting to you as a business owner. How can I raise the value? The Value Builder often talks about getting your business ready for sale. And that's kind of the perspective they come from. But in reality, we should always be driving our business value upwards. Ultimately, you're going to sell. Maybe the next generation is going to take over something, but we should always be striving to raise value. So don't discount if they talk about selling your company, which some of the literature does in the Value Builder. It's really about adding value, which you should always be doing as well. And then the survey will walk you through these 8 drivers. And let me just talk about them real quick. And I want you to, as I talk about them, write them down, but then begin thinking, schedule some time to think about these drivers. How do I think I stand? And I'll give you an objective ability to measure where you stand at the end of this. But think about these and then build them into your think time for your business. So the first driver is financial performance. This is probably the easiest one to understand. Every business should be driving improvement in their financial performance. How do I improve gross margin? How do I improve my EBITDA? How do I get more revenue? Maybe I need to raise prices. So we'll have you in the Value Builder system. We'll have you think through your financial performance, think about how you compare to others, and in ways that you can improve the performance going forward. So that is one of the drivers. It's a pretty obvious one. If you improve performance and finances, You're going to improve the value of your business. People always ask me, what should it be? What should it be? What should I be working on? Well, in scaling up, we typically say your starting point you should get to is 15% EBITDA is kind of the new excuse me, the new metric you should be working toward. That kind of gets you to a point where you're generating enough revenue and cash flow in your business to fuel future growth. So that's not hard and fast, but people often ask me, what's a good number to start with? Well, 15% EBITDA is a good place to get to. And from that, you launch into further growth. One of the other drivers is growth potential. Again, you may be looking at your company and say, hey, man, I'm really in a oversaturated industry. My products are commodities. Man, I don't really know what to do. Well, we found if you start thinking about growth opportunities, you can often find areas of your business that do represent growth opportunities for you. Maybe not your mainline business, but other areas. And those could be new products. Those could be, new products with new features. Those could be getting into new markets. Maybe this market's very saturated, but if I go to another market, it doesn't have as many competitors. So we want you to think about ways that you can grow within your business without maybe having to replace your business. So don't think that you don't have something that offers some growth potential. Almost every business does if they get creative. So that's the more growth potential you have in your business, the more successful you're going to be, because you're going to grow, obviously, make more revenue, more profits, and it also then will raise the value of your business. So every business has some area that they could explore for growth, even if it doesn't sound obvious right now. This value builder, we call it the Switzerland structure. It's really just a name to describe what it is, but where it comes from is if you think about Switzerland, you never hear about Switzerland. They kind of stay to themselves. They don't get involved in border squabbles. They don't get involved in wars. They got their own currency. They kind of just keep things to themselves. The point is they're not dependent. They tend to not be dependent on anybody else other than their own resources within their company. Well, that's the same thing in your company. You should not have an overdependency on any one customer, employee, or vendor. If you do, you are at risk. And if you do have this situation, you're not as valuable as the next guy who may not have those kind of dependencies in your industry. An example of that, I'm in Louisville, and of course, UPS here is a big employer and a big provider of a lot of services that vendors supply to them, or a buyer of services that vendors in the local area supply. I've worked with companies in my history that UPS basically was their customer. Everything they did related to their UPS relationship, which is great, especially a new business, because they big demand. You can often grow pretty quick because they have a lot of needs. Unfortunately, there's a lot of risk in that. And I've also seen companies get decimated when a new customer comes in to compete with them and UPS spreads the wealth around a little bit. So great to have them, especially when you're new and growing, but you should have a plan to limit your exposure to any one customer, so you're not at risk of really having a detrimental impact on your business if something changes. Again, the rule of thumb, 5 to 10% should kind of be where the maximum you'd like to keep. That's, again, not hard and fast. It's really a decision you want to make, but the less reliance you have on any single customer, the less risky you are from that structure. So that's the Switzerland structure. I want you to think through that. And I've seen companies put a 3-year plan together to eventually lower their exposure to a given customer. So they don't necessarily reduce the activity with that customer, but they grow business in other areas. So it essentially reduces itself. Another one, this is called the valuation teeter-totter. These are all cute little names, but what this means is really your cash flow in your business. High cash flow, more value. Low cash flow, less value. Because a buyer, this is looking from the buyer's perspective, they want a company that provides a lot of cash flow to fuel growth, so they don't have to come up with outside resources or as much on the outside. And businesses teeter-totter. So when they're going through a growth phase, cash flow goes down, which impacts your growth negatively. And when things slow down, you often have a nice fund of cash, but the revenue streams impact. So that's a teeter-totter thing. So you want to get more balance and consistent growth in your cash flow so that you can fuel future growth as you go forward. So that's what that means. Cash flow can impact the value, and it's a big teeter-totter, one really hard to balance. Great example of that is when the pandemic hit. The first time, all these restaurants went from revenue to zero revenue. So they immediately, their cash flow went to zero. I mean, quite literally overnight. They were not prepared for that. A lot of them have gone out of business now because they couldn't survive. So that's the valuation. They had a business that was worth something today, and the next day it was worth zip because of this valuation teeter-totter. So manage your cash flow is so important for longevity. This is probably the most impactful value driver, is how much recurring revenue do you have built into your business model? You've all heard of this. I don't know how much time you spend thinking about it, but I work with companies that have been acquired by private equity firms and venture capital firms. And I've seen the valuations that they do on companies before they come in to buy them. And it's really interesting when you dive into this. But what they do is in the revenue side, they will break revenue streams into basically two different areas. One is one-off revenue stream, meaning this is a single customer, single sale, no repeat business type of thing, and recurring revenue that is predictable and shows up every month or every quarter or every year from those same customers. The recurring revenue stream is valued at a much higher multiple than the one-off revenue stream. I mean, it can be significant, 3, 4, 5, 6 times, depending on the industry they're in. So recurring revenue has much more value to a buyer and to you because it's very predictable and dependable as a business owner than the one-off. If you're a one-off business, you're always looking for that next customer, which is really challenging, obviously. Again, come to me and say, "Oh, I'm a product. I'm a one-off guy. I don't know how to generate recurring revenue. It's just not my model." Well, working with a company that does refrigeration products, commercial refrigeration. So that's typically a one-off thing. They buy it, and they're not going to buy any new refrigeration equipment for quite some time. But what they do is they create a maintenance contract and a service contract, and they sell that along with the sale. So they've got this recurring revenue stream from the service and maintenance to support the one-off sale. And oftentimes, even though the service and maintenance revenue dollars may be less or will be less than the one-off, the lifetime value of that recurring revenue stream, depending on how long your contract is often and usually more than the one-off sale anyway. So you can create recurring revenue to a degree in almost any business. And there's basically 6 different levels of recurring revenue. Some are stronger than others. And if you get to kind of the subscription renewable stuff, there's like 9 different models. And the Value Builder kind of walks you through those and helps you think through which ones might fit for you. And then from that, you can then begin to take action to create more and more recurring revenue. Very powerful. If you haven't thought of this, you don't have this into your game plan, you need to get it into your game plan. This will raise the value of your company, make your company more successful. So whether you're selling or not, you're probably going to be a little wealthier by doing something in this area. Another one's monopoly control. This one's, again, a little more challenging at times, but do you operate in an area where there's very few competitors? You have a unique product or service that not a lot of people can sell. So you have monopoly control at that point in time. You can set prices. You can kind of control the customer base. Got a lot more power, control over your business if you have a monopoly. Again, most businesses these days don't have strong monopoly presence, but they need to think about ways to do that. Maybe it is a unique product you need to add to your product line. Maybe you need to go into a different market where you can be a monopoly in that marketplace and control pricing, control customer demand, that kind of thing more. So we need to think outside the box. Your immediate reaction may be, say, there's no way, I'm a commodity company, there's no monopoly. Well, there are ways to do it. And working through the process will challenge you to think of ways to explore, and over time build up some little monopolies within your business model. It won't be one big monopoly, but if you have 3 or 4 lines that are monopoly, again, proves the value and improves the success of the company. Customer satisfaction. It's more and more, I'm coming to the conclusion this may be the ultimate value driver. If you look at companies like Google or Microsoft or Harley Davidson, those companies have traditionally very, very, very high customer satisfaction levels. They also have premium pricing from a valuation standpoint. Those are public companies, but their values tend to exceed competitors in their same industry. And a lot of it's attributable to how satisfied their customers are. And that's very, very powerful, not just in selling your business, because it is when you're selling your business. I mean, you got great customer satisfaction levels. A buyer is very much more comfortable and willing to pay a little more for your business. But on the other side, even if you're just going to continue to run your business, a satisfied customer is one that you retain. So they're very sticky. So they're going to stay around. The more satisfied they are, the less likely they're going to leave, the less new sale you got to create, because you can play off of that new customer. Also, they are your best referral of new business. There's nothing better than a testimonial of a person telling a neighbor about your company and how great your company is. And then when that neighbor needs something you sell or a service, they're going to think about you. So they become your leading salesman. And I know of companies I've read about and seen. They've got very little budget in outside sales. It's mainly customer service and referrals. In fact, most of our business in the coaching comes from referrals, not kind of outside cold calling. So customer satisfaction can add a lot of value, add a lot of success, and make your life easier as a business owner or an executive or a management team. So this one's very important. It's fairly easy to measure, not as easy to implement. And I'm going to give you some tools today to kind of begin to think about that area. And the last driver is called hub and spoke. And just to give you an example of what that means. Airlines. Delta Airlines has got big hubs: Atlanta, Detroit, Minneapolis. And they're probably thinking about this weather storm that's coming in right now. That's going to probably impact some of these hubs they've got. And you all have probably been in it. When a weather event occurs, everything changes in air travel. Missed flights, canceled flights, delayed flights, all kinds of bad stuff goes on when something happens at the hub, primarily a weather event. Well, same thing for your business. And entrepreneurial businesses they're the typical hub and spoke if they're not intentional about it. Because the owner starts the business, runs the business, does all the sales, does all the customer service, does all the collections, knows all the customers by name. Everything comes through them. And it kind of becomes an ego thing often. And as the business grows and expands, they keep that mentality. I want everything to go through me. So you don't go call that customer unless I know you're going. Come to me before you quote a sale. Everything goes through me, the owner. I'm the hub and the weakness in the business. If you are a highly hubbed business and you're being compared to a non-highly hubbed business in your industry, you're going to be valued less because of this. Dependency on you, the business owner, the CEO, the management team, for most activities in your business will limit your ability to grow and is a bigger risk for an acquirer if that's the route you're going to take. So I'm going to deep dive into this and give you a concept or a tool that if you apply this, you will begin to reduce the impact of this hub and spoke dilemma in your business. And every company needs to do this. So let's kind of deep dive into it. Here's a fix. And basically every company I go in, coach, and work with needs to improve in this process. Now, some of them may have a higher degree of it, but not everybody. A lot of them don't even have it at all. So what I'm talking about is written standard operating procedures. And I'll deep dive into a little more of that. But let me give you a story. This is a guy named Danny Sleswick. He has a cabinet company in Brisbane, Australia. He came to a value builder coach and said, man, I'm ready to sell my business. I want to get maximum value. I'm just tired. I'm working 65 hours a week. I'm just ready to go. I know it may not be worth as much as I'd like it to be. Hey, can you help me raise the value so I can sell this thing? So sure, the value builder coach got him on a program. They worked through the system, and over 12 to 18 months, they implemented a big majority of the concepts of the drivers. And in turn, Danny was able to lower his workload to 5 hours a week because he had a lot of other interests out there he was involved in. And the value of his company went up by 83% based on some valuations that were done before and after. Bottom line is, he didn't sell the company. It was a great company. He loved the company. And because he could reduce his workload and raise his value, he kept the company. I don't know if he ever sold or not, but he ended up not selling because he'd improved things so well that his quality of life went up. He had plenty of time for other things. And he attributed it all to the value drivers that he implemented through the system. One of the main things he did is to reduce his time in the business, as he knew he had to offload responsibilities to his team, responsibility of things that he was doing on a daily basis, which was taking him the 65 and 70 hours a week to handle. The way you do that is you create written standard operating procedures, written and video. I'll talk about that, but you create in form that can be trained on all of your operating procedures. And the way he did it, I think he said he selected about 20 of his main processes, and he dove into that. And it probably took him the better part of a year or so to really get those documented, videos created, and training on his employees before he could flip the switch and on all of these procedures. But over time, he was able to get all of his processes documented, trained on, measured on, which allowed him to get out of the business to the tune of almost 60 hours a week. So it was very important in his path to getting to where he enjoyed his work. So why SOPs? Well, first of all, they're the foundation of a business that's built to sell. Again, you don't have to be selling, but you should build a business that you enjoy. And a business that you enjoy is one that allows you to not have to be there 24/7, because you can depend on your team to handle most of the things, and you focus on the things you enjoy and it's in your strength area, which typically are more strategic or maybe the sales area. And you're not dealing with these customer complaints or billing problems or whatever, HR or whatever. So it's the foundation of building a business that can thrive while giving you the freedom to work when and where you want. And just kind of put this boat on here. I don't know if this is what Danny did, but you could be out boating and your business just runs just fine. And one way you can help get to that situation is have strong standard operating procedures that your team knows and executes on, they're measured on, and it delivers the product and service that you want to deliver. Another is the key to happy customers. I talked about the customer satisfaction level. This is an area where you can create that model on how you want to deliver your product and service. So the customer is more than happy to be your customer. They're wowed, actually. I work a lot with companies, getting them to begin to map out, we call it map out the customer journey. And literally they map out, they go to a wall and they put sticky notes and pictures and they map out the customer journey. Start from when they first got the connection or the lead, got into the funnel, goes through the sales process, gets booked, make a sale, onboard the customer, and then afterward. You map the journey, and you map the journey you want to deliver, not a journey that happens just by whoever's dealing with the journey at the time. That's the key, is delivering a consistent experience that you want to deliver to your customers. And then you measure that performance. One of the greatest examples of happy customers and the value of SOPs is the McDonald's story. I don't know if you've watched the Ray Kroc movie, but if you remember, there's this episode, there's a scene where they go out to, I think it's a tennis court or a basketball court, and they map out the floor of a typical fast food, or not at that time, it was a burger joint. And they moved furniture around and they moved equipment around and they developed workflows that were real efficient. So over time, they got maximum efficiency where they could get a burger out in no time versus the typical burger store at the time. burger restaurant at the time. And they wrote the procedures down. They trained their employees on it. They measured them. They had a guy walking around with stopwatches, measured their performance on that. And it executed to a T, so much so that they are probably still the most successful franchisor in the world. And they would have never been able to duplicate that without having standard operating procedures that everyone knew, everyone was trained on, everyone was measured on, and they were used consistently from store to store to store. So if you go to one McDonald's here and another one in another city, you typically, at least used to, I know there's some other things that have gotten a little weaker in the current time, but you could go to any McDonald's anywhere in the world and get a consistent product, service, and experience store to store. So if you didn't know where you were, you wouldn't know where that McDonald's was, because you got the same burgers, same responses, same atmosphere. So very, very key to creating this customer satisfaction and maintaining that. So you don't have to be the face in front of all the customers. This chart's kind of interesting. You probably have all seen it, but the two columns are urgent, non-urgent items, and important and non-important are the two rows. Most entrepreneurs, if they don't have a good, solid system of operating procedures, spend a lot of time in the lower boxes. The unimportant but urgent, that's probably the biggest time drag you've got. It's the one where you walk in on Monday morning, there's 3 people waiting for you to ask you about a problem that's happened. Probably one that you don't even need to be involved in, but they want to come to you because you're the hub. So you spend too much time in those lower boxes and not enough time in the upper boxes. So one way to get there is to create these standard operating procedures that addresses 95% of all the things that can happen in your business. Train the appropriate people on those procedures and allow them to make the decisions according to these standard operating procedures. Gets you out of that and allows you to do more important things, which might be personal time, but also more strategic and more major things. The upper 2 boxes. Their goal as an owner should be to spend most of your time in the purple box up there, where you're working on longer term, not urgent, but very important stuff that's going to build and grow your business. That's probably where you add the most value, but you don't have enough time because you're down in those lower boxes. So SOPs will help you preempt any questions that may come up for your employees. And that's the goal of those, so they can act on their own. Confident employees. You all heard this term. We live in the great resignation right now. I just saw something a couple of days ago. Last month or last quarter was the largest number of people quit their jobs in history. And I think a lot of it's due to something like this, where they're not confident. They haven't been well trained. So they've got no connection. They're not engaged to your company. So when something else looks good on the outside, they're willing to jump and try that one because they're not really happy at work. An employee that's not confident and engaged, it's not a happy employee. And they're not going to be loyal for the most part. And they're really there for the paycheck. And they're not going to deliver the experience that you really want them to deliver to your customers. So SOPs allows them to understand what their job is, how to act on their job, how to make decisions for themselves on the job. They become more confident. A confident employee delivers a better image of your business. They're more engaged, and a highly engaged employee is less likely to leave you. So very important in retaining employees, especially in this big resignation time frame, where we're just hiring bodies and throwing them on the front lines with very little training, and the experience has not been very good for anybody, the customer or the employee. Again, this is kind of the duh, but it would just make your company more valuable. If you have a proven set of procedures that you can demonstrate and show an acquirer out there that these have been trained and these are in use and enforced, and they're living and breathing in your business with less dependency on you, you take risk out of the equation to an acquirer and makes you more valuable. That's just a fact. And again, don't worry if you're not planning on selling your business anytime soon. Doing this will make you more successful as a company and give you more time to enjoy life. One of the questions we ask about in the assessment says, if you left for 3 months, what would happen to your company? And there's like 4 answers. It'd suffer a lot, and we'd go out of business, all the way down to suffer a little and hardly suffer and thrive, basically. And just a chart, if you don't know if you can see it very well, but it basically says the ones that, or the business doesn't suffer much if you were to leave for 3 months, get about twice the number of offers of the ones that say we'd really suffer a lot. And that's basically what this slide is saying. But, and again, that makes sense. The less dependent your business is on you, the less risk a acquirer would have if something happens to you and after they buy the business. Again, you don't have to be selling for this to make sense to you either. Get you out and give quality life. And this is one that is primarily focused around and a sale, but it's an interesting reason why you should document your procedures. Helps you avoid an earnout. So, as I said, I work with companies that have been acquired by private equity, venture capital, and there's almost always a piece of the purchase price that is contingent on a future earnout, meaning I'm going to pay you so much up front, but I want you to perform for me for 2 to 3 years, and I'll pay you out the rest of the purchase price if you hit these targets that we're all going to agree on. Well, they've transferred now, the buyer has now transferred risk back to you, the owner, the seller of the company. And you don't like that. That is risk. And you say, well, I don't want to be committed for another 3 years, but I guess I'm going to have to be because I got to get this earnout. So having well-written, well-designed, fully implemented standard operating procedures will give you a lot more leverage on limiting or eliminating this earnout clause that you'll see in a sales contract. And I've seen it, and it is true. You may not always be able to get rid of all of it, but you can sure limit that, and you've got a lot more say in it as a seller. This is a JC Media's was an old value builder, a value builder client, not mine, but one of the value builder clients. She sold her company for 7 times, for a high multiple for her industry. The real key thing is that 2 weeks after the sale, excuse me, 2 weeks after the sale, she walked away. She could leave the business and had to no longer be there to run it. So she made a decision at one point, and it's in her statement. It says, if the idea of an earnout sounds like a jail sentence, which to me is, if I'm a seller, there's an alternative. Take your medicine up front, invest a few weeks in the painstaking process of documenting your SOPs and implement them in your company. Not easy to do, especially if you've never done this before. It takes time. So don't rush it, but get started today. But it will take you some time to build them out the way you want them, to train on them, to refine them and tweak them and measure those. But the sooner rather than later. But this allowed her to walk away and not have any earnout in her business. So if they're so important, why do so many owners struggle to create them? I walk into companies and if you got SOPs, no, never done it. Why not? We don't need to. Well, there's a concept of conscious competence and incompetence. And one of those is called unconscious competence. An example here is Wayne Gretzky, who probably by far, everybody agrees, is the GOAT, the greatest of all times in hockey. Maybe others that are as good, but he's one of the greatest. So you'd expect him to have all kinds of championship trophies and everything. Interesting fact I didn't know about, because I'm not a hockey person, but he never played in the playoffs when he was in the professionals. And when he was a coach, he only made it to 4th place in his division. So you'd think Gretzky, the best of it, that knew the hockey the best of anybody and was the best. Why didn't that translate to success on a team level? The problem was he had unconscious competence. He had learned hockey so well in his early days, and as he grew, it just became second nature to him. So he didn't feel compelled, and he couldn't really transfer that knowledge very well to other team members and to his team. So a lot of business owners have this unconscious competence, and they haven't done a lot to transfer this knowledge they've got up here into something that can be trained on and implemented in their business. So the point is, you've got to be intentional about this. It's not going to just happen when you show up to work every day and everybody kind of watches and they learn. It doesn't happen that way. So you've got to commit to documenting these procedures if you're going to really duplicate yourself. So what are some things you need to duplicate? Talked about some of this already. Probably one of the first things you start is the customer experience, called the customer journey. What do you want the customer experience to be? What do you want them to feel when they go through each of the stages of your process? How do you put a smile on their face? How do you email? How do you communicate with them? What's the brand you want them to think about when they work with you? So what's the customer journey? That's a great area to start. And you get a lot of bang for the buck in the time you invest in that area. Then there's all the behind the scenes, billing, collections, customer relations, that kind of thing, customer information. Those need to be documented and trained on as well. Make sure that the billing flows seamlessly and you don't have to be involved in every billing decision that goes on. So those are the types of procedures. You can get a lot of generic type templates. It's a good place to start, but don't accept those. Make sure that they are customized to your business. Every business is different. Every owner, every management team has a different idea of the experience that they want to deliver in each of these operating areas. So make sure you make them to fit what you want to design, and that'll help you stand out as well. Briefly here, there's kind of the 6 secrets, and really the big secret is you need to involve video in the process. And it says video with notes. So you can't just have just video, but you do want to have a more condensed notes or written form of these procedures. So the combination of the two makes them much more impactful, easier to train on, and it hits all the learners, the visual learners, the auditory learners, the ones that love to read. It hits all of those. So video is very powerful and leads to greater success and implementation of your standard operating procedures. Some statistics on why video is the best. 75% of employees are more likely to watch videos than to read a book. 69%, employees say they would rather learn a new skill from a video. So they'd rather learn by video than reading. I'm sure we've all been handed a binder and been told to go read and understand all the things in the policies in the binder. Much rather watch a video broken down into bite-sized bits. And the third one says 3 times easier to document. So I've had this experience at Petra. I've created a few standard operating procedures in some areas, and I literally go on a website called Vidyard, and I can pull up some visuals, and I can sit there and record a operating procedure in about 30 minutes, probably even shorter if I had it laid out properly. And it's ready to go. It can be edited and duplicated, but in quickly. And it's something that would have taken me probably hours and hours to really duplicate in full detail in writing. So it's easy to do. Video is much easier to use. So use video. That's kind of the I just talked about. Keep it short. We live in a TikTok generation. I don't know if you're a TikToker. I'm not, but I've seen TikToks, and they're all really short clips of things. They get a lot of eyeballs. They get a lot of attention. So make your videos short. So break it down into individual tasks or groups of tasks. So it's easy to understand, easy to digest, and easy to implement, as opposed to some 1 hour long video. So make them short, make them impactful, make them very visual, and break it down into logical steps. One touch, attempt to make every process one touch. So you're not having to, once you get to one stage, you kind of got to go back to the beginning and kind of bring things back up to speed again. So think about that. How do I keep the steps one touch? So I don't have to go back to any steps. No double data. This is a great area where you have a lot of errors. And what we're talking about here is when you bring a customer in the funnel, you get a lot of data on this new customer, data that you can use. So when they become a customer, that data should transfer over into the customer fields in the billing and the customer service area, as opposed to having to be reduplicated. So build processes so you only have to enter data once. So you got to think through this stuff, and you'll find some errors when you do it the first time and you go back and tweak it. So it's an iterative process, but your goal is to have single data entry in all your processes so you don't have any mistakes and information stays consistent. And have clear roles and responsibilities. We talk a lot about accountability and coaching. Make sure that your team, whoever the team member that's applying this procedure or this process, knows their role and their responsibility and clearly, and then measure them on these things. Your SOP should have measurement points. So make sure everyone understands their role, their responsibility, and where they fit into the process. So designate that, be very clear on that. And then make them available. Going back to my Petra experience, when we first started, we were very small, really just creating a company at the time, 5+ years ago. And we were writing SOPs and anything, and we were dropping them in Dropbox without a lot of forethought, because we were just kind of running at that point in time. And it kind of got to be a common phrase when everybody was looking for something. The common phrase would be, it's in Dropbox. It's in Dropbox. And it probably was in Dropbox, but we could never find it. So there's no organization built into it. Done a much better job going forward. Got some smarter people than I was out there doing this kind of thing. But make sure it's accessible, it's understandable, and they can get their hands on it as opposed to going to have to look for it somewhere. Because there's going to come an eve and they're going to need to refer to it in some area, and you want them to have access so they can immediately apply that procedure when it needs to be applied, as opposed to having to defer that. Good news, I've got a free ebook. It's a definitive guide to standard operating procedures. It's a good little book. It'll get you started in understanding operating procedures, where to start, maybe some tools and things you need to do. Be glad to provide that to anybody that wants it today. I'll tell you how to get that in just a second, but it's an ebook on standard operating procedures. If you do just this and work on this, you will improve the value and your quality of life will go up. I promise you, as a business owner. The more time you spend documenting your procedures and policies and training and giving accountability to your team, you're going to have more time to do the important things, the strategic things, maybe take off early and go play golf. Maybe enjoy your vacations a little more. So this is so powerful. So if you take this one thing from what we talked about today and begin to really dive into that, you'll get a lot of value in a lot of different areas of your business and your personal life. So I'll give you that ebook. Be glad to do that. I've already kind of covered this, but who is the value builder system for? It's really for everybody, every company. Its initial focus, or the perspective it comes from, is for companies that are going to be sold, which all companies will. But I really think it's for everybody. Everybody should be striving to improve the value of the business, because it only improves a lot of different things. More money in your pocket, but more so maybe quality of life. You're in a business that you really enjoy. You're not having to deal with all these unimportant, urgent things every day, and that's all you spend your time. You're not burnt out when you go home at night. You can take time off when you need to, and your business doesn't suffer. So it's really a quality of life. If you want a better quality of life, Value Builder will help you improve some areas that will deliver more value in that area as well. So here's kind of the offer. Okay, for those that stuck around, here's the offer. I will be glad to give you a link where you can complete the initial Value Builder survey, and it's typically, often charge $250 for this thing, but I want to give you the link for free. Let you take the survey, and then I'll get it'll come back to me. Your report will come back to me, and I'll forward that survey. So you can have your Value Builder score on where you stand today. So you kind of know if you're in the 50s or 60s or 80s, maybe you're in the 80s, which is great. That's just more validation. You've done some good things and you've got a more valuable company. So I'll be glad to let you have the survey, create your report, and send that report to you. And if you want to follow up with me after that, we can determine what next steps might be. So first thing, we'll give you a Value Builder assessment link that you can take your own and get your initial report. And then David and I have been working and talking about putting together a special offering for the SBDC membership, greatly discounted scholarship from what I would typically charge, or a coach would charge for this mastermind group. So we're kind of finalizing the details, and when I communicate with you from this assessment, we'll be able to share more details. But what we want to do is put an initial group of 5 to 7 companies That's all we're going to take in this initial mastermind. And they'll join up, and we'll put you through a 12-month program. There are 12 monthly modules that you'll complete, exercises, videos, tasks, and things that you'll work on. And then every month we'll get together, spend me as the value builder coach and these 5 to 7 company leaders, and we'll spend an hour and a half talking about that month's module and that month's value builder concept. Answer questions, next steps, that kind of thing. So over the course of 12 months, all these value builder concepts will be explained. You'll have time to think about them in your business, work some exercises, and begin to implement some things. So then at the end, we'll do the value builder assessment again. And I know for a fact, if you are intentional and you complete these things in your business, you will have raised the value. There's no way you can't unless you're already 100. So at the end of time, we'll do another measurement and you'll see which areas you've improved in, and your overall score will have gone up. So 12-month program put in together to work with the SBDC membership. More details that will be provided to you after you request your initial assessment. This is kind of the system. You don't have to look at this, but there's 12 modules that we'll walk you through. It's a complete system. And what I really like about it, it's a fixed set of time. It's basically 12, 13 months sometimes. So you're not committed for years. It's very tactical. You'll begin to see some results in fairly short time frame. And and the good thing is you can be exposed to all these things and take them forward in your business after just about a year. So I like that about the business too. Scaling up is often a longer process, a great process, but it's normally, 24 months, 36 months. So it's a longer, more strategic process. I really like this because you can begin to see results, and it's easy delivered in bite-sized pieces to you. So here's what you need to do. Take my email, david@petracoach.com, david@petracoach.com. And you can subject line, you can call back, say value builder, SBDC member, whatever, there, and maybe send me a note. Please send me the link to the questionnaire. And then when you do, I'll send you a link. That will be your own unique link that you'll take the questionnaire. It'll come back to me and I'll send it off to you once it's completed. I will include this ebook on the definitive guide to SOPs. So I like to deliver a little value when I do these things. So you'll find that to be a very helpful guide to get started or refine your SOP process. And then we'll share some information about this mastermind offering that we're putting together. So I know the things I shared today in the SOPs, if you'll just do that, you cannot help but increase the value and your quality of life and your enjoyment in your business if you'll just take that. Hopefully you'll email me, be interested in these continuing on with Value Builder. The more I do it, the more excited I get about this program. So hopefully you're interested. Get in early because we're only going to take this one group at this point in time. So if you want in, please respond and get back to us. So with that, David, I am done. I'll take any questions or chats or anything that goes on, or we can just go on and go back to the grocery and get some more milk and bread. So
no, so folks out there, if you have any questions or comments, please put them in the chat and we'll get right to them. And I will say that from a personal experience, some of the companies I've built early on, I did pretty much everything wrong because I was kind of winging it. And there was a point in time when I had a fairly large company that I had built. I had several hundred employees, and I was going to die soon because I was, doing everything. I was burnt out. I really wasn't making any money. And luckily I came across a mentor that kind of helped me get things straightened out a bit. But once we worked through this kind of process where you start to professionalize your business, as Dave said, 2 things happen. Number one, just by going through this process, you are able to look at the different processes within your business, and you'll intuitively increase the efficiencies of them just by trying to document those systems.
Yeah.
And then secondly, from a personal standpoint, I didn't really start making good money until I did all this stuff.
It's funny, isn't it?
Because all I had was a job, and I had to do it.
Yeah.
Christmas morning, something happened at the plant, I was gone. It didn't really matter. So
exactly,
there's no way to live.
It just by virtue of writing things down and creating videos, you get more clarity and you find weaknesses, improvements, and like you said, efficiencies, and you begin to enjoy your jobs. It's remarkable that the companies that don't have procedures written, they just expect people to come in. I hire the right people and they can do their job. Well, no, they can't. Not the way you'd want it to be done. And they don't do it consistently. So really a lot of power there.
Yeah. Most employees want to perform. And if you don't tell them what their job is, they'll create it. And it might not be the job that's right for you. You know?
Exactly right. It's not fair to the employee.
Exactly. So let's see. So if you have any questions, go ahead and put them in there. And we will send the slides, and I'll also send the link Dave's email, so you can reach out to him. I really encourage you to take this test. It's really cool. And the first part of any improvement plan is to figure out where you are to get that baseline, so you know you can improve. And this is a there's tons of stuff out there, but this is a really good one to start with. So let's see. Another thing that I think that maybe you could talk about a little bit, David, is once you start improving these things, you mentioned a lot about selling your business. A lot of times, unsolicited offers just happen when you have a decent business, right?
That's right. You should always be running your business, improve the value, because ultimately every business gets sold. You die, it gets sold. Your family sells it, or you move on to the next generation. So every business does sell at some point in time. So why not start early and have that mindset? So
Or another thing that I always try to do is, you don't have to sell, but if your business is well run and it's an asset, you can buy another asset. You can, you have the time, you have the capacity to add, build a little conglomerate or whatever you want. But it's easy. It's not easy, but that's the way to do that. And this is the place to start.
That's the story of the cabinet guy that I gave the story. He had other businesses he was interested in, and he kind of did that. He went off and did other things, and he still kept this very successful business and gave him, 5 hours a week. So all he had to put into it so he could do these other things. So yes, great example there.
Yeah. Do you, as part of your services, do you offer help with SOP creation?
I do. I don't tend to hold that because it can be a very involved process. I offer guidance and be glad to review them. I've done that periodically. Typically not an area that is a good use of the coaching time, and probably not a good expenditure if you start paying us to help you create those things. Most of the times you can do them internally. You just got to have some guidance on how to do it. So, and to have someone come in on the outside and do it for you can be very expensive, and they often don't really get you what you want. They're going to lead you down a path. Most companies end up doing it internally, and then maybe have someone look at them afterward to do some refinements.
Yeah, what you just said reminds me of what we experienced here at the SBDC when people want us to write their business plan for them, or they pay somebody to write their business plan and then they don't know what's in it. Yeah. So you can't implement what you have. So
that's right. You have to do it yourself. You know what you want to deliver. What experience do you want to deliver? How do you want to? It's you, the owners, the managers. So nobody can do that other than you.
Yeah. Another thing maybe you can talk about, I've been on several, buy-side acquisitions, and, one of the strategies that a buyer will do is the idea of discounting. You say, well, I'll pay your full price. And then when you go through the due diligence period, you start finding all these little things, and you start discounting. And then you thought you're going to get a good sum of money. And then at the end, the offer is, 75% less than you expected.
That's right. And I love these value builder concepts, because a lot of them are kind of intangibles that most business owners don't even represent to a seller. They're focused on the profitability and the tenure in business and that kind of thing. If I can go out and show an 80 customer satisfaction level, and I can show, and you can go out and ask any employee how to run this thing, and they can tell you verbatim how it's going to be run, and you can test these concepts and represent them to a buyer, you got a lot of leverage at that point, using these things that typically don't get injected much into the selling process.
Yeah. Melanie says this was very helpful. Lots to think about.
Yeah. Lots to think about for sure. It's not, nothing's easy, but well worth the return that you would get. So.
Yeah. And like you said before, it's not a quick fix. This is not a pill that you can just take and you're done. This is a painful process, isn't it?
There's a little pain. There's definitely a little pain, but well worth it in the long run. So.
All right. All right. I don't see any other questions. We're at the top of the hour. David, it's always a pleasure to see you.
Yeah, I enjoy it. Thank you for having me again. I don't know why you keep inviting me back, but I appreciate it. So,
well, I love Scale Up. You know, I like Petra Coach, and I'm a big Value Builder fan as well. So,
both great methodologies. They both have their place.
Yeah,
I'm glad to get part of it.
Yeah. So again, we will be sending everyone a recording and the slides later on today, as well as Dave's email address. Please reach out to him. I'm personally telling you that this is something you need to do if you want to really grow your business, make your life better, and make money. So
very good. Thank you, Dave.
Dave, thank you so much. We'll see you next time, everybody. Thanks for joining me.
All right.
Have a good day.
Thank you for joining today's webinar. At the Kentucky SBDC, we know small businesses are the heart of our economy. That's why our goal is to help business owners start, grow, and succeed in Kentucky. Find out more about how our no-cost business coaching, training, and resources can help your business. Visit us at KentuckySBDC.com.